So if you're a loan officer thinking about a new place to work, you might want to look at Geneva. One of the reasons is they have agreed not to exit the European Union. It's a big point that not a lot of people are doing right now. So Geneva, think about it. Click this right over there. So here's how fabulously crazy our global economy is, and this makes no sense whatsoever, yet here we are. Here's how it goes, guys. Great Britain gives the EU the finger, and you get a refinance boom. How does this happen? Now, all they did at this point was give the European Union the finger because it's going to take up to 2 years to get this whole thing implemented if they ever do. That's 2 years to vote to reverse secession, or 2 years to really let the Brits forget and really do nothing about it whatsoever. Now, I say that because apparently they voted to leave the European Union, but the people who put this in place, they don't have a plan whatsoever. And as you know, if you're a realtor or a lender, it's a good idea to have a plan. Nevertheless, one vote here, no plan, and for some reason all the way across the pond, you, my friends, get a refinance boom. Now, it's a refinance boom because, as you know by now, rates went down. I'm telling you now, rates went down after the fact, just like Zillow and Fannie Mae did last week, right?
Okay, check it out. Ocwen paid $30 million for breaking FHA and HAMP rules. Yeah. It's alleged that Ocwen violated the False Claims Act, the same act everyone else violates. The same act that was created to keep the U.S. military from buying lame mules from private contractors during the Civil War. Yeah, that one. Ocwen's SEC filings, like everyone else, said they were going to vigorously defend itself, and they didn't. Also, like everyone else, they admit no wrongdoing whatsoever. Ocwen says, even though we have solid legal and factual defenses, we decided to settle to avoid prolonged and distracting litigation and the associated legal costs. See, I've gotten so good at doing this story with these points that I can tell the story without even moving my lips.
I don't know if you saw this one. It kind of has something to do with housing. I thought it was kind of funny and interesting. House Representative Shaka Fattah, who is one of the architects of the Emergency Homeowner Program with HUD, the program that gave interest-free loans up to $50,000 to homeowners who lost their jobs back in the battle days of the recession. And by the way, these were 2-year or 24-month interest-free loans. That guy, he's facing up to, let's see, what is this? Oh yeah, life in jail for fraud.
One of the things that he did was launder money in his run for mayor of Philly, for which he got busted. Then he repaid his laundering with charitable donations and federal grants intended for his nonprofit, the Education Advancement Alliance. And this guy, he's a House of Representatives housing recovery architect. My goodness.
And I gotta tell you, you look at this type of stuff and you see what's happening in the housing and the mortgage industry right now, and I'm telling you, this right here is precisely the reason why people are sick of institutional politicians. Here's how it goes, guys. The British population went against the will of its government, right? And here's why our elections are in revolt against the same institutional mindset. Shaka, this guy, he says he's stepping down because he doesn't want to be, a distraction. No, that's not true, and everybody knows it. He's stepping down because he's a crook. Now, Paul Ryan says we have to hold our elected officials to a higher standard. Again, our housing architect guys, no, we just have to hold them to some standard. Let's not get ahead of ourselves. We just want some semblance of any standard. Let's not get too greedy and demand a high standard. It's also, how do we put this in the industry? Not shocking, don't you think?
According to Ginnie Mae, their outstanding mortgage-backed securities for May of 2016 was 27.6% of the market, and for the first time ever had more market share than Freddie Mac.
Now, Fannie Mae, they're still the leader over here with market share with a whopping 44.6%, almost double what Freddie or Ginnie has. But to give you an idea of how much money we're talking about when we speak of Ginnie Mae and the good old FHA and VA, their outstanding securities total $5.8 trillion in back loans.
And in case you don't know, Ginnie Mae is a government corporation that guarantees bonds backed by FHA and VA home mortgages. So a bank will bundle FHA and VA loans and sell them off to an investor, and Ginnie Mae guarantees that any losses to the investor are paid for that guarantee. Right now, they're guaranteeing against $5.8 trillion. So is a healthy Ginnie Mae important for our economy and the housing market? Yeah, I'd say just a little.
Everyone's making a big deal of this Brexit thing.
Yeah, the British thing.
You know, I thought this was kind of funny when they came out with the European Union, they came out with the euro. The whole idea was it was going to be the global currency beating out the dollar. That, by the way, was the main reason why they came out with a 500 euro note, so it's easier to transport by the billions of dollars across borders, right? Where we only have a $100 bill. And I thought to myself, well, let's see. Europe has a 3,000 plus year history of being really terrible to each other all the time.
Right.
You've got a million different cultures, a million different languages and subcultures and sublanguages, all with the history of never getting along. Do you think they're going to play nice in the same sandbox forever? Frankly, I'm surprised it lasted as long as it did. Here's the big thing, guys. What's going to happen next? Who falls out of the EU next?
Well, you guys, let us know what you think. Leave your comments down below. Forward, share, and subscribe for free. Check on Geneva if you're looking for somewhere to go.
And Greece doesn't count. They're going to get kicked out.
See you guys later.
Bye.
Bye.